Unlock $2,000 per child. How to qualify for the 2025 Child Tax Credit. Are you leaving money on the table? With the updated Child Tax Credit for 2025, millions of families in the U.S. could qualify for up to $2,000 per child. But are you sure you meet all the requirements? Missing even one step could cost you big time. In today's video, we're breaking down everything you need to know about the Child Tax Credit for 2025. From eligibility requirements to income thresholds, we've got you covered. So stick around, because this could make a huge difference for your family's financial future. Let's start with why the Child Tax Credit matters. It's more than just a tax deduction. It's direct financial support. This credit allows you to reduce your tax bill dollar for dollar. And for some families, it even means a partial refund of up to $1,700 per child. Imagine being able to use that extra money for your child's education, medical expenses, or even just easing the burden of everyday costs. For many families, it's a lifeline. But here's the thing. This isn't a set it and forget it benefit. You've got to qualify, and the IRS isn't exactly lenient. Speaking of which, let's dive into the 7 requirements you need to meet. And trust me, number 6 might surprise you. 1. Age. First up, your child must be under the age of 17 at the end of the tax year. If they turn 17 on December 31st, they no longer qualify. No exceptions here. 2. Relationship. The child must be directly related to you, whether they're your biological child, stepchild, foster child, sibling, or even a grandchild, niece, or nephew. Got a cousin you support? Sorry, they don't qualify. Quick question. Does anyone else feel like the IRS wrote these rules after one too many coffee breaks? 3. Dependent status. Your child must be listed as your dependent on your tax return. And here's the catch. They can't file a joint tax return themselves unless it's solely to claim a refund. 4. Residency. The child must have lived with you for at least half the year. But don't panic. Temporary absences like school, medical care, or military service don't count against you. 5. Financial support. You must have provided at least half of your child's financial support for the year. If someone else covered the majority of their expenses, they're not considered your dependent. 6. Citizenship. This one's crucial. Your child must be a U.S. citizen, national, or resident alien, and must have a valid Social Security number. No Social Security number, no free kids. 7. Income thresholds. And finally, the income requirements. For 2025, the phase-out begins at $400,000 for married couples filing jointly, and $200,000 for other filers. The credit gradually decreases as your income exceeds these thresholds. It sounds straightforward, right? But wait, there's more you need to know about how the credit is calculated and why some families still miss out. To ensure you get the full benefit, double-check your dependent status and Social Security information before filing. Mistakes here are a common reason for delays or rejections. Also, remember that this credit is partially refundable. Even if you don't owe taxes, you could still receive up to $1,700 per child as a refund. That's money you don't want to miss. The Child Tax Credit is one of the most powerful tools to help families thrive financially. It's not just about reducing your tax bill, it's about investing in your family's future. If you found this video helpful, don't stop here. Check out our video on the power of compounding to learn how to grow your wealth even further. And if you know someone who could use this information, share this video with them. Make sure to subscribe and turn on notifications so you never miss out on game-changing financial tips. Thanks for watching, and here's to your financial success.